Welcome back to the show. Today, we're talking about something that might sting a little. Your portfolio is probably more basic than you think. Not basic like pumpkin spice, basic like you and millions of other investors owning the exact same 5 tech stocks. Yeah, those. Most people think they're diversified because they own a bunch of ETFs or a couple of big names like Apple, Amazon, Microsoft, Nvidia, and Tesla. But if your portfolio is just different ways of holding big tech, you're not diversified. You're concentrated. The top 5 to 7 tech names now make up almost 30% of the entire US stock market. When one sector becomes that big, it stops being an opportunity. It becomes a crowd. And here's the big thing most people are ignoring. High interest rates change the game. When interest rates were near zero, tech stocks could go up on promises alone. We'll revolutionize the world in 2035. Sure, cool. The market loved that story. But now, at 5% plus yields, investors can make money doing nothing. You can sit in a treasury bill, take no risk, and get paid more than a lot of high-growth companies are earning today. Think about that. Risk-free is paying more than some startups with billion-dollar valuations. So, where's the smart money going? It's rotating into assets that earn right now, not someday. These are sectors that benefit from stable cash flows and real demand. Infrastructure, roads, bridges, utilities, things governments can't ignore. Dividend-paying value stocks, companies that actually make money. Energy and utilities, boring. But you pay your power bill every month, right? And yes, US Treasury bills. Guaranteed income with zero drama. Not as sexy as AI robot pizza delivery, but way more reliable. If you want to explore alternatives, here are a few starting points you can research. Look into high-quality dividend stocks. Infrastructure companies building the world we live in. Short-term treasury bills that literally just pay you. These aren't hype plays, they're cash flow first investments. Note, and of course, not financial advice. Do your own research before investing. Here's the bigger message. The next decade won't reward what worked in the last one. Tech will still matter, but it won't be the only way to build wealth. So instead of copying the market, build a portfolio that actually pays you. Thanks for listening. If this episode opened your eyes or gave you something to think about, share it with a friend who only owns tech stocks. You probably already know one. I'll see you in the next episode.